What's up, guys? Today we're talking about Ethereum. The price prediction, my personal target, is Ethereum going to reach $10,000? What are some bull cases for Ethereum and what are some bear cases for Ethereum? So if you're an Ethereum investor or if you're a DeFi investor, you likely hold some Ethereum and this video might be interesting to you. If you guys are new here, my name is Richard. I'm a yield farmer and a crypto investor. I've been able to grow my portfolio from zero to over six figures. This is my liquid portfolio, not including NFTs or other investments. So I've done pretty good, but hopefully during the altcoin season, our portfolios would do even better. Still printing with my liquidity pools. Each pool is earning roughly 25 to 75% APR here. And if you guys look at my other videos, I've been mainly focused on altcoin pairs. But now I'm shifting my focus more and more into crypto to stable pairs like Ethereum to USDC and trying to optimize around US dollar value, stack more stable coins rather than keep stacking Ethereum because that's what I typically like to do when assets move upwards. I want to be securing more and more profits. And then when the assets draw down again, I could focus on accumulating more and more crypto assets. And just a quick disclaimer before I dive in. None of this is financial advice. I'm not your financial advisor. So please do your own research. Your analysis could be different from mine, which is great. You can leave it in the comments down below as well, and we could discuss the different outlook on Ethereum. I've had a lot of debate on Ethereum with a ton of people since Ethereum wasn't really a strong performer until very recently, right? A ton of people were bearish on Ethereum when it was trending down from $4,000 all the way to below $1,500. And now we see the sentiment flip 180 degrees when the prices are leading once again. So what are my main bull cases for Ethereum? The first is it's simply the most decentralized and secure layer 1 network. So if you want to use smart contracts securely, Ethereum is the best place to do it. There's simply no other place, including the layer 2s. They're typically more centralized, and different blockchains like Solana, AVAX, and Sui, they're definitely much more centralized than Ethereum. And really to achieve a more decentralized network, the market cap needs to be high enough so that people cannot just buy a bunch of Ethereum to, control the network, right? And also the Ethereum network is not really controlled by like one single entity where they could like censor and freeze your funds like what we saw with Sui. If you guys didn't know, there's a DEX on Sui that's called Cetus that suffered a hack a few weeks or a few months back. And what happened was that the hackers stole the funds, right? But a large portion of the stolen funds were frozen, so they were able to recover some of the money. But that situation had some good and the bad side to it, right? The good thing is that they were able to recover some of the investor funds. But the bad side is now that we know that a lot of the funds can be frozen, which makes censorship a little bit of a concern, right? If you were to hold like millions of dollars on Sui, for example, your funds could ultimately be frozen and you don't have total ownership of your asset, right? If you're on Ethereum, for example, Bybit got hacked for a few $100 million. The hackers dumped a large portion of it into the market. That's also what drove like the prices down a few months back. But there was no like frozen funds or rollbacks that took place, right? So it's much more decentralized and censorship resistant in my opinion. And so it makes the most sense if you hold a lot of funds in crypto and you want to use a smart contract network to be utilizing Ethereum. The second bull case for Ethereum is that more and more companies are going to accumulate Ethereum. You can see based on this article here, GameSquare Holdings announced that it's increasing its crypto asset management authorization from 100 million to 250 million, and they're trying to use an Ethereum yield strategy to pass the yield down to the investors and to generate return. So we're going to see more and more of this. Corporations are accumulating Ethereum very, very heavily. And if we go to this ETF tab here, and change it to the weekly chart, you can see Bitcoin has been hovering around $1 to $2 billion of inflow in the last couple of weeks here. And let's compare that to Ethereum. Last week, we saw a huge $2 billion inflow. And the week before that, we saw almost $1 billion worth of inflow. So the ETF inflow is the main factor that is driving Ethereum's price upwards. It's not really retail interest, If you guys have been tracking retail interest metrics, we know that there's not a lot of retail investors that's back in the market yet. A lot of retail investors probably got wiped out on like lower cap altcoins. So maybe it would take them a little bit more time to FOMO back into the market, especially if Ethereum breaks its local high at $4,000 and then above its all-time high near $5,000. My personal target for this ETF inflow is around 1 billion per week. If we saw that amount of inflow, I believe that Ethereum could 2x from its current price relatively easily here. And one thing to realize with Ethereum compared to Bitcoin is that the market cap for Ethereum is much lower, right? It's at 455 billion right now compared to the $2.3 trillion for Bitcoin, meaning that at this current price point, every single dollar that goes into Ethereum would have 5 times the price effect compared to Bitcoin. So Ethereum is still very volatile because of that reason. So if there's a ton of people dumping Ethereum, the price would go down by 5 times the effect compared to Bitcoin as well, but it would also move up 5 times compared to Bitcoin if we're seeing similar amounts of inflow. And if we go back to the Bitcoin spot ETF chart really quickly, we could see when Bitcoin started moving up pretty aggressively, we were seeing roughly 2 billion, 1 billion, 2.2 billion, 1.67 billion, right? 3 billion. So really around the 1 to 3 billion weekly inflow. That's quite a lot of money, especially for Ethereum, since the market cap is much lower. So in my opinion, if we do see a sustained like 1 billion net inflow per week for like a couple of weeks, we're going to see a much more explosive move upwards. And one key difference between Ethereum and Bitcoin is that Ethereum is much more flexible in terms of its usage. It's much easier to use it as a collateral in lending protocols, for example. So it's very easy to generate a yield on Ethereum. You can use it to yield farm concentrate liquidity pools, like what I'm currently doing to generate a yield. And you could simply stake your Ethereum as well to generate a yield of anywhere between like 2 to 4%. And if you're using riskier strategies, you could boost those yields as well. But it's a really easy sell for Wall Street, in my opinion, because Ethereum inherently would generate yield that is very sustainable, right? Ethereum is a proof of stake blockchain. In exchange for validating transactions, the Ethereum stakers basically get a yield in return, and 3% yield is quite high for TradFi investment people, right? If we look at a high dividend ETF like HTHD, which I like to accumulate as well, you can see the yield is around 4%. And if we look at the bond index fund, it's also around 3.75%. But with Ethereum, there's much more growth that's baked into it, in addition to the yield as well, if Ethereum grows as a network, right? So 3% yield is very easy to sell, in my opinion. And that's why we're seeing so much inflow from institutions. And if we hop to DeFi Llama, another bullish case for Ethereum is that Ethereum has basically retained its DeFi dominance, right? If we're comparing total value locked, you can see the last previous month, we saw an increase in 31%. But what I'm more interested in is this total percentage number. Back in 2022, Ethereum was hovering at 58 something percent, right? And if we include Arbitrum here, which is an Ethereum layer 2 at 1.36%, we can see the DeFi dominance is roughly 60%. And it kind of fluctuates over time, right? It dips to 56 there. And then here in 2025, we could see Ethereum's dominance is still at 51%. If we add Base and Arbitrum, Base at 2.64, Arbitrum at 2.2, we can see it still makes up roughly 56%. So the dominance is still there. And very recently, Ethereum's dominance is 58.86%. Base 3.06, Arbitrum 2.08. If you add all that, it's actually 64%. So the dominance of Ethereum in DeFi is still higher than in 2022, right? Which is really, really great to see. If you believe in DeFi and you want to invest in crypto, Ethereum is the safest bet here. And that's where the value would flow through the most. A lot of stablecoins are coming onto Ethereum. You can see there's $130 billion of stablecoins here. The second largest one is probably Tron here at 82 billion. Sure, there are stablecoins on different chains like Solana, Binance Smart Chain, and other chains like Sui as well. But you can see Ethereum is still king in DeFi. It's the backbone of DeFi. All the major protocols are on Ethereum. If we go to this overview tab here, we can see Lido is like a liquid staking protocol, right? It's on Ethereum. Aave mainly is on Ethereum as well. EigenLayer is an Ethereum restaking platform. Binance Stake ETH, EtherFi, and then a bunch of different protocols like Uniswap, Pendle. They all have a lot of liquidity that is on Ethereum. So if you're investing into DeFi, but you're not holding Ethereum, then you're basically missing the forest for the trees, right? The regulation is also clearing up as well. We saw a recent bill that basically supports the stablecoin narrative. So if you believe in the stablecoin narrative, that more and more companies are going to issue stablecoins, more money is going to flow on chain, you can bet that a lot of it is going to be on Ethereum. And knowing all that, it's very, very likely that Ethereum will still be around for the next decade or so. They're still continuing to innovate. It's not like they stopped innovating, right? Currently, they're still trying to scale the L1 to make the transactions faster and to reduce the cost of transaction. So there are progress with the network, even though it might seem slow, but eventually, if Ethereum becomes really, really cheap and very easy to use, there's going to be more and more people using Ethereum as well, right? So it's going to be around for a long time. I don't see Ethereum going away anytime soon. If Ethereum is dying, the chart would not also look like this, right? It would just keep dumping over time, and then the interest would drop, the volume would drop, and then some other chain would take over as a result. And lastly, my major bull case for Ethereum is that more and more people use Ethereum as a unit of account and actually try to accumulate Ethereum, right? They're thinking in terms of Ethereum, like, okay, how many Ethereum I have? Like, let's accumulate 10 Ethereum, right? 20 Ethereum, similar to how you would accumulate Bitcoin. Or if you're trading Solana meme coins, a lot of times you're trying to accumulate more Solana because you believe that the Solana price is going to go up higher, right? If I started with like 10 Solana, for example, and I'm trying to trade meme coins, I want to get to like, 50 to 100 Solana. I don't want to just, make a US dollar profit, but then a Solana loss, right? That's the philosophy behind like my yield farming as well. A lot of times when I'm yield farming Ethereum based pools, I don't want to make a US dollar profit, but lose a lot of my Ethereum in the process because that just doesn't make sense, right? It means Ethereum is moving up, but then the other altcoin is not keeping up. So really, Ethereum is a really good asset to bet on, in my opinion. And we're seeing some movement in the NFT market as well. There was a huge sweep of CryptoPunk, 76 CryptoPunks to be exact, worth like 13.5 million, as well as 35 squiggles here. And they're both higher end NFTs that have been around for a long time, right? It's a great sign of people trying to accumulate more Ethereum. A lot of NFT traders I know or NFT investors, they think in terms of Ethereum. If I'm buying a CryptoPunk for 30 Ethereum, for example, or 40 Ethereum, I want to be able to sell it in the future if I'm trying to trade for like 50 or 60 Ethereum in the future, right? I'm not really trying to accumulate US dollar. That's a lot of the cases for Ethereum and just another bullish case for Ethereum. As more and more people use Ethereum as money and a unit of account, we could bet that the price would just go up over time. And lastly, Ethereum simply has like the best tokenomics for major L1s. If we look at this ultrasound money site here, the way Ethereum works is that the more people use Ethereum, the more gas fees that people pay, and then a portion of that is used to burn Ethereum, right? And you can see the issuance and the burn rate here. The inflation rate is even lower than Bitcoin. So it used to be deflationary. Now the inflation is back a little bit, but it's still hovering around 0.116% per year, right? Which is not very high at all. It's lower than 1%. If it's lower than 2%, I'm still very, very happy because if the demand keeps up by more than 2% per year, the price should go up, right? So the supply side of the equation is not really an issue here. The issue is the demand. If there's more and more demand, like what we saw with the ETF inflow, the price would naturally move upward over time. So those are my bull cases, but there are some bear cases against Ethereum as well. For example, there are a lot of competing layer ones, right? We see Solana's strong performance last year. Solana is much faster and cheaper to use, and it's a retail favorite simply because meme coins were really hot last year. Maybe we'll see some sort of similar price action with Solana. The charts are looking really, really bullish for Solana as well. So Solana is definitely a consideration. So if you're buying Ethereum, but you're worried about Solana taking over, you could always buy both, right? So it's not like you have to pick one layer one to invest in. You could invest in multiple, for example, Ethereum, Solana, and maybe even smaller chains like Sui or AVAX to diversify your holdings, right? But in my opinion, even though there's a lot of competing layer ones, a lot of those layer ones are competing on scalability and speed. They're not going to be able to overtake Ethereum in terms of security and decentralization, in my opinion. Ethereum is still like the largest asset class for layer one chains, and it's much more decentralized. You can't just buy like 50% of the network, right? It's going to take a lot of money to do so, and the price would just move up too much before you're able to actually accumulate 50% of the staking power to overpower the network, right? But if you believe in Ethereum, you're not really going to try to do that and control, 50% of the network anyway, because once you do, nobody is going to trust Ethereum because it's not as decentralized, right? One argument against decentralization that I hear a lot of people talk about is that retail just doesn't care about decentralization, right? And that could be true if you're holding like a couple $100. In crypto, if you lose it, that's not a big deal, right? But if you guys hold a big portion of your net worth on Ethereum or in crypto that you actually worked hard for, like I do, then we do think about security a lot, right? It makes no sense to be keeping like 100% of your funds on one single blockchain, especially a blockchain that is not as decentralized or secure, right? So that's something to consider as well, especially for institution investors. They value security. So even if Solana or Sui goes up by like 300% and Ethereum only goes up by 150%, a lot of investors would still take that 150% gain because it's more secure, right? And the other main argument against Ethereum is that it still has scaling issue. This is the gas price of Ethereum. There's not a lot of people running transactions right now, so it's very, very cheap. But you can see if the network gets congested here, the gas price would rise along with it. Your transactions would still go through, but you have to pay a higher price for it. But I think scalability is still a problem for other blockchains as well. We see Solana saw like a few outages last year when a lot of people were transacting on Solana. But also if the usage on Solana is very high, your transactions simply won't go through, right? As far as I know, you can't really like speed up your transactions and pay extra gas fees to basically front run other people's transactions. You just got to keep clicking and keep trying. But this could actually be very problematic, especially for DeFi. Let's say you're lending out Solana, right? But you're highly leveraged and then Solana's price dumps really hard, but the network is congested. Those DeFi protocols really need to basically liquidate those assets to be able to pay back the loans, right? But if they're not able to do it in time, then the investor funds that are on the platform, the lenders are at risk. So really, Ethereum is still the best for DeFi. It doesn't matter if the gas prices are higher, if you can save like millions of dollars from basically becoming bad debt, right? And which is what we need as well. Sometimes prices do move downwards pretty aggressively, like what we saw with Ethereum. If the assets need to be liquidated or people need to add different collateral to pay back the loan or to lower the liquidation point, then the gas price doesn't matter, right? If I have a ton of money that's on leverage and I want to deleverage, it doesn't matter if I pay a few $100s in gas price if I'm saving thousands of dollars in the process. But those are the two main bear cases I have against Ethereum. There's a lot of competing layer ones, and Ethereum still has scaling issues. We never know if Ethereum is going to be very cheap or very fast to transact on. But in my opinion, as long as it's very secure and decentralized, that's still a huge win. and still a huge value proposition. So now that we went over the pros and cons of Ethereum, let's take a look at the technical targets. So right off the bat, we see Ethereum's monthly chart. The momentum is swinging back up. The MACD has flipped from like the dark red to the light red, and now is starting to cross over to the green side, right? The histogram. And this is where we see this MACD cross here, where the blue line crosses over the orange line. That's actually a very bullish signal. Like what we saw at the start of the bull market, we saw the cross and we saw the price went up from roughly $1,800 all the way to $4,000, right? So if we see another cross here, that's a great sign. The momentum is on Ethereum's side. It's not really overbought yet, right? If Ethereum's monthly RSI, and I use a 25-period RSI here, if it's overbought here, that's hovering between 70 to 90, I would be more worried about drawdowns, but currently it's not overbought at all. So in my opinion, I'm still very bull biased. I think we will see more upside from Ethereum. Compared to the first run up here, I think the targets could be much higher. And if we use a fib retracement tool, we basically take this point and then draw it to the bear market low. We can see a couple targets here. My first target is around $6,000. If it gets rejected around 6,000 and there's a lot of monthly and weekly chart topping signals, then that could be a little bit worrying. But really the main key resistance that we need to worry about is this previous all-time high here near $5,000. So if it's able to break and hold above 5,000, I think Ethereum could potentially push higher to near the $6,000 and even the $9,000 range. So this is a great range to be in. And of course, if it breaks 9,000, then it could test this 10,000 to 12,000 range. And in terms of my personal targets, I'm actually starting to take profits here already using the fees that I generate from yield farming. And if you guys don't know how to yield farm, then be sure to check out the other videos on my channel. I go into a lot of details on how to actually be profitable from yield farming, but you can see I generated quite a lot of fees here this month, sitting on roughly almost $5,000 now, and it's close to the end of the month. So I will be taking profits pretty heavily at this zone. And if it moves higher and higher, I would be even more aggressive in taking profits. But if the ETF inflow keeps up, I believe this $6,000 to $9,000 zone is a very achievable target. And if there are no negative news in the market, I think this $9,000 to $12,000 zone is still very, very achievable. If we look at the 2018 high at roughly 1,400 and then measure it to the last cycle high, we saw a 200-something% increase. So roughly a 3x from its previous high was the last cycle high, right? If we see a smaller multiple because of diminishing return, let's call last cycle high at 5,000. If you pull a 2x multiple from that, then we can see a $10,000 target, right? So it's not out of reach at all. I think it's very achievable. And what I also want to look at is this ETH Bitcoin chart here. You guys can see this reversal is pretty clear, but we'll still have to wait and see if this reversal would sustain. If we see this 0.032 mark do a 2x to 0.064, while Bitcoin price is just moving sideways here, we could see Ethereum's price would 2x from here as well. So roughly 7,500 if you're basing the prediction based on the ETH BTC chart, recovering to at least 0.06, that's a conservative target. And again, if ETH BTC does go back to its previous high, roughly at 0.09 there, that's almost a 3x at the current price. So it would put our target roughly at $10,000 as well. So in my opinion, Ethereum reaching $8,000 to $12,000 is not out of the question. It's still very achievable, and I think a more conservative price target might be around $6,000 to $7,000, but we never know what's going to happen in the future. In my opinion, Ethereum is still a relatively cheap asset. We could see Bitcoin is hovering at $2.342 trillion here. So higher than Google, and I think Bitcoin could eventually reach near the gold market cap in the next 10 to 15 years here. But Ethereum, you can see, is still ranked number 25. If Ethereum 2x from its current price, it would be ranked roughly number 15 here between JP Morgan Chase and Berkshire Hathaway. But I think Ethereum has a pretty large addressable market because with DeFi, we could do stuff like, transfer a lot of money over different countries. We could store our assets, which are what banks do, and we can process transactions, which is what MasterCard and Visa does. But larger banks like JP Morgan Chase, Bank of America, all of these banks have pretty large market caps, right? But if Ethereum is able to capture like 50% of the banks of the future, if you want to think about like DeFi like that, then I think the total market cap reaching $1 trillion is not very unreasonable, especially because Ethereum has so many use cases, right? It's not just for banking. There's lending and borrowing. There's tokenized assets. There's just a ton of things you can do with Ethereum here. And I think Ethereum is still undervalued here at $450 billion. So knowing all of that, what is my plan heading into the rest of the year? My plan again is to sell more Ethereum on the way up from the fees that I earn from yield farming, start stacking more stablecoins. I don't want to wait until the market is really weak to start stacking stablecoin. I want to front run that, right? When the prices are good, I want to keep taking profits. And then I might even short Ethereum and short the market a little bit to protect the downside of my portfolio if we push up to that $8,000 to $12,000 zone to kind of protect myself against the possibility of a bear market. But the charts are looking bullish. I'm not going to sell all of my Ethereum here at this current price. It doesn't make sense to do so in my opinion. But it also doesn't make sense to hold like 100% of my holdings in fully crypto now anymore. I was fully in crypto when the prices are so cheap at this $2,200 and $1,500 mark here. I deployed all of my capital. I was in fully crypto to crypto pools. And now I'm transitioning more and more to crypto to stable pools and then taking more and more profits the more aggressive the prices move up. So hopefully this video was helpful, guys. A little bit of a longer video. And again, if you guys want to learn more about yield farming, how to generate passive income with your crypto, then be sure to check out those other videos on my channel. Thanks for watching. I'll catch you guys next time.